A little bit. Still on my way back home.
Funny.
Just maybe 5 minutes. So I'll be walking. Okay. I can still
Oh,
chat,
okay.
but I'll turn off the video. Oh, will that be all right?
Yeah, sure.
Okay. All right. Okay. So maybe we can start by sharing some wins from last week. Would you like to start?
Okay.
All right. Go ahead.
Um, we had a rather frustrating um, contract negotiation with one of the suppliers for our kitchen refurb, and um, the win is it was resolved on Friday with the help of
Congrats.
a third party organisation that we had used as part of the procurement process, and they were really helpful in getting a result that was what we wanted really. So I have to say that's kind of that's a win really, because it meant that we had closure on the whole uh, dialogue, or whatever you want to call it, which was proving to be rather painful and annoying. What was interesting, the learning that came from that is that how we can be. I can be good at negotiation from certain perspectives, but not in others. And when it became somewhat emotive and directly confrontational, I I lost my strength in the negotiation to be able to kind of close it down. Whereas when I'm just doing general business, I'm a lot more kind of calculated, but relaxed and happy for there to find amenable win-win kind of solutions. So there gets a point where I can recognise my yeah, I suppose, for want of a better word, weakness. But it was an interesting evaluation and assessment, if that makes sense.
Okay, nice. But looks like you found a professional help, right? To with the negotiation, and it
Well,
was
yeah,
done apparently satisfactory, right?
yeah, for sure.
Okay, okay, nice. All right. This reminds me, I'm actually going through Chad Waterson's book, Fit for Wealth, I think,
Uh-huh.
and he talks about that you should always get a coach when regarding your own matter.
Mm,
I mean, we can be objective when we're looking at other people's business, but
mm.
when it comes to our own inspection, accountability, and that, we're usually bad at it. So get a
Yeah, no,
third
that makes
party,
sense.
get get another eye. So,
Yeah,
all right, great. But congrats. I think that's a closure, it seems. And I
yeah,
know the
exactly.
kitchen has been important for you, right? I mean, for your
Been,
family and
yeah,
the
been going on
yeah,
too bloody
it's
long.
okay. All right, great. All right. So I'll share some win on my side.
Cool.
Okay, so last week basically facilitated two discussions at my initiation. So one was introducing a hotel chain owner with uh, Donald and his team with the bartering, okay, because
Mm-hmm.
there's a potential for using barter platform to exchange between uh, hotel rooms and
Mm-hmm.
versus professional artistic service such as music performances, artistry,
Mm-hmm.
etc. Okay, so I think that's a good start. And the other was to again to try to help this woman Samantha, who's trying to. I think I shared this last week. She's trying to get Hualien to participate with the MIT RIP program, which
Yeah.
is a entrepreneur, kind of a entrepreneur hub development program, and basically introduce her some potential who could be, partners. One of the things that came from that discussion was the realization that Taiwan actually would be good for medical tourism. Okay, especially let's say Hualien, because there's actually quite good hospital and expertise and relatively cheaper rates, very good price cost ratio, CP, and also Hualien is a great place in terms of natural beauty. So yeah, so that's so those are the couple of things last week. And the third I would say is just starting get to learn and actually relearn Chad's work, okay, in his perspective. So I would he's got I think a new book coming up in May 4th. I think just in a few days. And yeah, so but he's been written a few books. What I found kind of really interesting that I learned from it is this book Fit for Health was Chad's gamble, or yeah, gambling away with friends that he's going to, after realizing that he was getting unhealthy, he just wanted to get back into health, but at the same time turn that into a book, okay, and talks about the relation between wealth and health and how they are strongly correlated. So his friends thought he was just joking, but he actually just started to eat clean like the very next day after he made the declaration. So and so he said about he hesitated to starting stuff, but when he started, he goes all in. Okay, so I think that's yeah, that's definitely a very winning, successful, uh, behavior. Okay.
You were cutting out there.
All right. So I guess that's my win and sharing. All right. Okay. I'm going to the elevator now, so maybe just bear with me 2 minutes. Would that be all right?
Okay. Yeah, of course.
Okay. I'm going to go through the elevator now, so maybe bear with me for a couple of minutes.
Yep. Okay.
Okay. All right. Hello? Can you hear me
Yeah,
again? All right,
yeah,
yeah. Oh yeah, so thanks. Um, one more win was last time we chat, I think I caught a cold, right? For a fever
yeah,
from my son. And
yeah.
this actually took probably 6 or 7 days to fully recover. So
Oh dear.
yeah, it took me a week. And it's been yeah, quite so the good thing is yeah, I'm recovered. That's a win. And I guess corollary sort of one of the things from that was never be too proud of, I mean, always be humble. never
Hmm.
never overestimate yourself in any I guess in any circumstance. So yeah, so I guess that's another. All right, so I'm back here now, and I think I'll just switch. All right. Okay. All right. Much better. Can you hear me now?
Yeah, can you find? Yeah.
Okay. All right. Okay. So Mike, yeah, I guess just any feedback or regarding the catch up wins.
Well, I think yeah, I mean, you did cut out a little bit there, but let me. I suppose the only thing that I'm really ever present in my, what can I say? My feedback for you is concentration of your time and effort, because you'd said that
Okay.
you'd spent some time looking at this thing for this other woman in wherever it was, this MIT thing.
Right.
Is that you spent
Right.
some time introducing Donald to a head of a hotel group, which is great. So, but what are you doing for you, and how is that
Oh,
beneficial
okay.
to you? Are you getting a fee for doing that?
Okay. Okay. So with the woman, I guess the hope or the is to get that to because really be looking at the unicorn incubation or towards that, right? So part of that could be training courses for potential entrepreneurs that are, interested on path, going to that path. So I guess the strategy, because she's going to be representing, potential, she's already part of an association. It's actually secretary of an association that's handling out Google grant. Where she works right now, Google has given them $10 million to hand out to entrepreneurs over a
Yeah,
period of
but
three
okay.
years.
So yeah, you've
So,
said that, but how does
right.
that benefit you?
Oh, okay. So I guess the idea is to get their sponsor, get their approval for some of the program or coaching course or investor, who might be,
Have you said any of that?
um, not yet. I don't think,
Okay, so my point
okay.
is, if you've got an idea that
Okay.
maybe it might be helpful because you
Okay.
might be able to do something in the future,
Okay.
then you're just drifting around, mate. Just be
Okay. I
specific
see.
about it and go,
All right.
right, Stan. I tell you what, I think you've got some potential here. This is where I'm at. I
Mm-hmm.
have this.
Right.
This is
Right.
what I do. Right,
Mm-hmm.
it's my unique ability. I think that could be of a real value to you and your team, because
Mm-hmm.
right, and
Mm-hmm.
then you make it clear, you make a pitch, and then you let it go. And then you go, and how is that going to be of benefit to you? Well, tick, 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 tick. These are the reasons why.
Okay.
And I'm happy to help with getting you this, this, and this, and this. But of course, quid pro quo, I want to see something out of it. Likewise, what's the hotelier and Donald? What's Donald going to do for you? Is Donald going to help you with anything? Are you paying him to be your mentor? Is he giving you something in return?
Okay.
If he's not, helping people is great,
Right.
but you've got to help yourself first, mate. And if you're until you have a kind of platform from which you can be stable, helping other people to make money and be successful is not going to help you to be successful or make money. So that's my only feedback.
Okay. All right. Okay.
Yeah, the reason why I'm doing this, right, working with you, is because I believe that our iteration of JCF, which is currently, we're calling it TAPP, just for argument's sake, but the true purpose of what we're doing is at some point in the future, there will be something of great benefit for other people. And but one of the stepping stones is TAPP. And so, and one of the things that TAPP is going to do, because it is a true global, blockchain kind of convoluted strategy, it will generate huge amounts of income, and it will generate huge amounts of profit, of which I will get a significant share of. That's why I'm doing it, because it conforms both with a very long-term view, but also conforms with a very short-term view. So otherwise, what's the point? If we're not going to make money at it, then what's the point? Because I want the short term to pay off so that I can enable myself to do long term. But that's just So I'm just looking at my hair and it's looking horrible. By the way, have I told you I'm going to CoachCon?
Oh, no, you haven't. Okay. In May, right? Wow, congrats.
Next week.
Okay. Next week. Right. Okay. Wow. So
I'll be traveling. Yeah, I'll be fine. I'll be traveling next Monday.
Wow. Okay. Nice. Okay. So that's exactly Wow. So how long are you going to be in the in the States?
For a week. I'll be back. I'll be less than a week, actually. I'll be back on the Sunday. So I travel on the Monday, come back on the Sunday.
Okay. Nice. Okay. Wow. All right. So that proves your point. You have to take care of yourself first. So you can go to Coach Cup. All right.
I mean, it's still a bit of a risk for me. It's still, I don't. It's not. You see, it's not like going to Canada where we had a purpose relative to JCF and stuff like that. Going to CoachCon is a bit of a punt, but it's a learning punt, and it's also one where I decided that it would increase my what's the word, luck exposure. So if you sit within a group of, I won't be the smartest guy in the room. I will be amongst other entrepreneurs who are further along their journey, regardless of how long they've been spent on their journey. They will be further along than me, and so therefore I will learn things from them. It'd be nice to think that I might impart some bits of wisdom to other people, but I'm going there because I want to learn and I want to meet people.
Okay. Wow. Congrats. That's a huge win. Okay.
Yeah.
I can definitely. All right. So so maybe we should start.
Sure.
What are specifics you like to go over for today?
Have you looked at the narrative?
The narrative draft. Did you? No, I haven't saw the latest version. I've been working on the white paper. So there's been an update.
Where are we at with the white paper then? That's what you've been working on.
Okay. All right. So the white paper, basically created a version and tried to put I guess the structure, the things myself. Okay, I mean, would you like to check the narrative first? Is that something you'd like to do first?
Well, if you've not read it, then I mean, I guess I know what it says. I mean, we can go through it together, but it's up to you.
Okay, okay. So the narrative, do you'd like to go through yeah, and one, yeah, I think my productivity probably was affected by, yeah, by last, you know, I mean, my
By what?
body state, yeah, yes, last week. But anyway,
Okay, so here's
so
another thing, right? So
right.
just so you know, right, regardless of the
Mhm.
fact that the kitchen was a pain in the ass, I still
Right.
completed the narrative to my 80%, right? And
Right.
I've also taken on the development of the slide deck as well, right? So
Right. Right.
regardless of what other things I'm playing with, I'm getting things done for our Monday meeting. And the
Right.
thing that you've sat there and you said to me about some spam and her unicorns, and then Donald and his hotel, they're not
Mm-hmm.
beneficial to us. I
Okay.
don't
Not
see any
directly.
relevance to that to TAPP, right?
Mm-hmm.
So, and now you say, well, you know, A, you haven't looked at the narrative, and I told you about it, and then B, there's the white paper. So I'd kind of say, you know, this idea of focusing, you know, your
Mm-hmm.
attention on
Right.
those things, and because
Okay.
they're the things which are more important to us,
Right.
right?
Right.
If
Okay.
we're to move it
Right.
forward.
Right.
So
Sure.
I appreciate you've had a cold and all the rest of it, and that you need to take some time off to get better, and that's vitally important because you can't think if you've got
Mm-hmm.
a cold. But so anyway.
Yeah. So let me just is try to confirm if is this the narrative? Okay. Is this or okay? I'm trying to see the other document. Is is this the one you've been working on?
No,
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 not
that's
this one.
his.
That's the example, right? So
Yeah,
not this one.
no.
No, okay, okay, right. So it's probably in the shared drive.
Yes, it is.
Hmm. Okay, right here.
Mm-hmm.
Okay, so that would be this one, the tab narrative. Okay, this one, right?
Yeah.
Okay, liquidity borderless access.
Remember, he doesn't want any. He doesn't want any kind of bullet points or formatting. So all I've done is
Mm-hmm.
put some headings there, but I haven't
Okay.
formatted the headings.
Mm-hmm. Okay. Mm. Born global. Where did you get this?
I don't know. I thought that was your idea, actually. To be honest with you, I don't know where I got it from.
That was for a sender, I think.
Oh, was it? I think it was in your
It
original.
was. It was.
Yeah, well, I took your original, some of your original, and played with it. So there you go.
Okay. Okay. Great.
I don't just rewrite everything. I do try and glean what I can.
Okay. Okay. I see. All right.
So,
So that's yeah.
so also then, in the oh god, where is it? Oh, what's going on here? But in the TAPP narrative, then you've got that. But I also, where is it? Yeah, so in the document that's got white paper 0.1, which I think you're in at the moment, I put in a contents page, and then I also put in there a tokenomics bit, which is basically the bit that we spoke about.
Right.
With the investor tokens and stuff like that. And I just cut and paste what was done in the what's that?
Right,
message.
the chat. Yeah. Yeah. I saw that. Yeah. That's
So
good. That's good. Yeah.
Now I think that we're getting closer to getting something. So I've also
I actually
screen.
added it a bit. Okay.
Oh, you did? Oh, that's good.
Yes. Haven't done the full editing. So right. Okay. Good.
4 types of tokens.
Right. So basically, it's the investor management or right, the professionals, the real estate. These are the yeah.
Why 4?
This is for the actual tokenization of the properties.
Then that's not in TAPP, is it?
Well, it's not to technically it is. I mean, on the TAPP platform, although it's not.
Yeah.
It's not.
But if
it's not being run. TAPP is not being run by it. If that's what you meant, yeah.
no,
It's not
and this
used
is
to
not
run
so.
TAPP.
No, it's not, and that's the important thing. We're distinguishing between TAPP and what this document is doing is it's talking about TAPP, and then and we're raising funds for TAPP, the platform to build it, not each of the real estate opportunities.
I understand, but shouldn't we also discuss how the actual property tokenization should work? Right? I mean that for example, using SPV, special purpose vehicle, right, to basically be the legal representative.
At present, that is a way of doing it, and as far as we're aware, that's the best way of doing it. But we're not talking about that for generating the 2 million or 1.5, whatever the number is, to build TAPP. That I don't. So I think we just say that the TAPP will generate the TAPP platform or framework will generate tokenized property or real estate projects, and have that as a separate, and we can talk about it in that context where there will be real estate tokens, which will, but there aren't 4 tokens in TAPP. There are 3 tokens in TAPP.
I understand your point. Okay, so so maybe not here, but I think the real estate token definitely should be explained. Somewhere. It's
yeah. But it's, I mean, that's then you see. Then each project will have its own tokenomics, and the reason why that's important, because each project, you might find that Henry, for instance, will have a different set of criteria than is it Kevin, the guy from the Ling family?
From representing,
and that might be different. And that might be different to Christian. Each one of them will want to see their property tokenized in a different way, potentially. So
right.
I think, broadly speaking, we envisage every one of those will be in an SPV, and each one of those will have some combination of capital and income sharing, and the tokenization of the asset accordingly.
Right. And
however, we don't know what that is until the project is put in front of us.
Okay, but I think we do want to explain what's the general framework, right? Regarding, let's say, if there's a real estate investor, then he's interested to invest in one of the properties. What does that look like, right? For example, how many tokens? Let's say if 2 million are going to be raised, how many tokens are going to be issued, right? And how the process would look like. I think.
Yeah, we could put a typical. Typically, we would anticipate that, for every, and we might say for every $1 million raised, then yada yada. And a typical example within our Taiwanese market at present would be a typical raise of 2.5 million. Therefore, you see, the thing is, if you put it on a percent, an easy percentage thing of, say, like, we want to raise, if you want to raise $1 million and it's 30%, well, then that's, what that is, right? It's 300,000. But if you sit there and go, well, and then start saying 2.5 million is your typical raise, well, and then 30% is like, well, what is that? That's 600 plus another half, so that's 750. You have to start doing all the mental arithmetic to work it out, which for some people is really easy, and for people like me, it's not. But I think, we can go into that. But again, I think that's looking at the individual component parts, and that's not the same as the tokenomics of raising TAPP itself.
Okay,
but it is important. It is important because part of our profitability will come out of the raising of these projects.
Right, exactly. Yes. Okay. All right. So, all right. So I think in terms of the narrative, I think that's a pretty good overview. Okay, already. That's an 80% done draft. Okay, for sure.
Yeah, I think so. Yeah.
Yeah, and the okay. All right. So, and also,
so do you want to have a look at the slide deck?
Yeah, sure. Is it also here?
No, not
okay.
Really,
you want to show it? You want to share a screen then? Okay.
I will do. I've got to figure out how to find it though. Hold on a second. Wait a minute. Oh, no, it's here. It's here. There it is. Okay, let's try doing it like that. Present that like that. Okay, no. Then let's go to here. Let's go to here. Share screen. There we go. This should work. Boom.
Okay.
All right. Can you see that?
Okay. Yes. Yes. I can see it.
Okay, so I haven't done it all. This is a logo. Can you see the logo?
Yes.
So
Okay.
that logo, Anastasia's done that. Doesn't. I'm not saying we have to use it, but I kind of like it.
Okay. Okay. Nice.
We can do a different one. It doesn't matter. All of this information down the bottom. Well, we don't have any of that yet, so we'll have to figure that out.
Mhm. Okay.
So all I've done really is I've taken the stuff from the narrative and squeezed it into the investor deck.
Mm-hmm. Oh, okay. Okay. Hmm.
Now, possibly,
Mm-hmm.
and this is as far as I got, because this is just the that's just the rest. That's just standard stuff from the template. But this is taking data that you've already got in yours that you put in both of them. So if I go back here, possibly we could drop out some of this wording here and make it easier.
Mm-hmm.
Likewise here, remove some of the content, make it easier to read. Likewise here, but I don't know actually. I mean, it was just the first draft, so what I
Mm-hmm.
want to try and do is get a general kind of idea of the direction I want to take it in. Sorry, I'm looking over there because that's where the on the screen is. So yeah, but I mean, it's kind of like that's what I'd expect to it to look like.
Okay. Wow. So wow. So this is the number that we have. Is the 729 trillion correct? That looks like a
I don't know.
huge
It was in your.
number. It
It was
was
in
in
your.
the
It was.
okay. Because
I don't.
I was just checking the global wealth and it came out to be something like 450 trillion at the moment, something like that, or I don't know. I recovered.
Look, I got that number from your document. So if it's not,
Okay.
if I assumed that it was correct, if it's not, then we'll have to find that out.
Right. Okay. All
But
right.
I mean,
Okay.
2.7 billion tokenized. That's globally. That seems about right. I would imagine.
Okay. You mean if tokenized is just 2.7, then the global real estate
No,
should
no, no,
be,
no. I don't know
no?
about it. I mean, the thing is, that, and then because these are your numbers, right? So you got them from a Forbes article, apparently.
It's from one of the yeah one of the I just found the yeah it's one of the research report. Hmm. Okay.
Okay. Well, I mean, we can change those numbers, but that's
Hmm. Okay. Okay.
and you
All
see
right.
now we would sit there and so I would probably put in here in the next one is start talking about what are we looking for? What are we going to capture of that market segment?
Hmm. Okay.
And this is where we say, well, we anticipate that each project currently, our current the current projects that we've got a alignment to is 2.5 million raises from each.
Hmm.
And so
Hmm.
this is where we can start talking about what TAPP will the profit that TAPP will generate from each one of the tokenization projects.
Hmm. Okay. Okay.
Because that's where people are going to start going, well, all right, so if I invest my 500,000 today,
Hmm.
what is it going to be worth tomorrow? And this is where we need to sit there and tell them that it's going to be worth 5 million by year 3 or whatever.
Mm-hmm. I see. Are you going to pay based on the revenue forecast stock that we previously, created?
Well, I'm not sure which one we've been working
Okay.
on. So okay,
One.
so you've seen this now. That's you've got
Yeah.
this as an indicator. So let me just stop sharing.
Right. Okay.
What was the
So this one.
what was the
This one.
thing that
This is the TAPP master doc. Are you going to be use the numbers that's here? I think this was the original forecast, right? We had.
yeah, but I there was some numbers in there I didn't like because I didn't think they added up. That I just don't know where you got them from. And so I think I think it's easier to sit there and go, because you're making assumptions based upon growth and
market growth of this.
Yeah. And so I thought, so when we what was the other document? Hold on a second, let me just find it. Yeah, so what, can I just share screen?
Sure.
So on this one.
Okay. Oh yeah, I think that you did this one, yeah. Regarding
so is that it's different, Kevin. So I think what's easier then is that because this actually covers the question of whether or not it's profitable for somebody to invest in a TAPP project. Because or how we're going to address this section here of if we've got 1,000 investors right. for every million, then they would assume that they're getting $1,000, $1,000 worth of TAPP tokens, not $900 of TAPP token value, right? So it's whether or not we sit there and we position those 100 tokens being on the side of the the investor or the developer, or the investee, I don't know, right? So but then what we've got here is all these calculations. We can sit there and go, well, look, we've got anticipated for every $1 million within the current within Taiwan, for instance, based upon our known numbers, we would be looking at growth, rental growth, management fees, and so on and so forth, and cost of delivery. And then we can sit there and go, in year 1, it'll be 3.4%. In year 2, it'll be 17 point whatever, right? So straight away, people can sit there and see that, and then that actually gives some. But also, this is important because then for every million, somebody who invests in TAPP, they're going to say that, well, what does TAPP get out of it? Well, TAPP actually generates $103,000 out of every million. So TAPP, so if TAPP is able to convert, if we're saying that the total market, the total tokenized market is 18 billion, well, and we're saying that for every, we could realistically do 10 million in the next 3 years. Then they know that out of every one is 100. So in the next 3 years, that'll be $1 million worth of profit, right? So again, is that a good enough return on investment for them? And I think that's that's the question. And indeed, is that something that is good enough, right? So if we're making $1 million out of 10, for putting it all together, then that seems like all right, I think. You know, if you're making $1 million out of 10, then that's not a bad kind of
return.
Yeah.
And you're talking about this in 3 years time, or like that in
Well, I don't know.
1 year
I think
time?
it's based upon Henry's kind of feedback that he could do 10 million in 3 years where he's at the moment, right?
Right. True. That's the total number of assets under the management or properties being tokenized.
But I mean
So,
that's so Henry's telling you that if he stood where he is today, he could do that as it is. So that's a good benchmark for us to sit there and say, well, okay, if he can do that, then there will be other people that are interested, and then they'll do.
We can replicate. The key is in the replication part. Yeah.
And I think then we need to sit back and go to Christian. We think we've got this framework sorted out now. Because his biggest problem was using Homebase. So if we're going to sit there and say, well, we're not going to use Homebase, we'll build it ourselves, then he'll be happier because it's all centrally, there's more control over it.
Okay.
And then you sit there and say, all right, so look, we think the project structure should be this. How are you seeing it? And then work with him, because he's got his things set up, but he hasn't tokenized it properly. He's just fractionalized the properties, but he hasn't figured out how to get the tokenization bit done. Well, if we tell him that we can tokenize it, but there's going to be a cost around that, then we need to find out what that's going to be. Now, if he can sit there and then say, well, all right, I'm like Henry said, well, I want to have 0 interest and I want it to be all, an average of 2.5 million. If he sits there and gives us the same sort of parameters of, well, in 3 years, I'd anticipate that we would convert, 50 or 100 of our projects, which are, this much, then we've got something to work with, right? And then we can build all of that into some level of forecasting.
Okay, I see. So,
because then we can sit there and realistically say that on the back of this, we've got properties in Taiwan and Indonesia, and the pipeline is of projects which are looking to get to be tokenized. So we're looking at this map. Straight away, that means that anybody who's investing in the building of TAPP will be interested, because they can see that there's a demand for what we have on offer.
Right. Okay. All right. So I think one of the things you brought up was, is it okay for the investors to look at and understand, realize that if we're charging 10%, right off the raised amount, then is that an ROI they're still happy to accept? And I think so according to the calculation you have here, it's sorry, can you maybe, I recall you did it for like 2 years, right? You did two years worth of calculation. And
5 years.
5 years?
Yeah.
Okay. Year five. Oh, I see. By different quarters, right? By different quarters.
Yeah.
So what's the I guess the ROI, the actual ROI so that's the actual ROI at the end of 5 years, right? So what's the first year? What's the first and second year ROI?
3%.
Okay, I see. Okay. 3 and 17, right? Okay. So, and this is assume, um, I mean, the assumption here, can you scroll up? The management fee is 10%, right? Okay.
This is
The,
10% for the Henry's kind of
I see.
outfit,
Okay. The
and this
management
is
fee.
10%
Okay.
for covering, I don't know, bits and pieces
Oh, I see. Right.
like
Okay.
a boiler or a
Right,
roof
right.
repair or something like that.
Right. You were calculating of all the potential costs of operation, right? Remove that
Yeah,
from the revenue
yeah.
and okay, and assume a certain rental, right? In rental growth. Okay. Hmm. Okay. All right. So, I'll probably want to have a deeper dive on this as well.
Hmm.
I mean, just right now, if that's the number, okay. I'm just trying to get if this is in alignment, rough in alignment with what, what Henry was indicating. Because I think the numbers he gave, kind of the rough estimate was 25%. Um, for 10 years. Okay, and 25% annual ROI for, in 10 years. But that factors in the capital appreciation of 100%. And then also about 10% of, I think,
Yeah,
rental
well, for a
rental
capital
income.
growth of 10% per year
Right,
in
right,
10 years
right,
is 100%.
right. Exactly. And then there's a 5%. Oh, sorry. Okay. It was mainly three buckets. Uh, rental profit was about 5% per year. Okay, I think that was his estimate. And then capital growth was about 10%. Okay, just for the housing market in general, 10% per year. And then there's another 10% per year that's due to what's called the urban planning, urban replanning. Okay, so urban replanning is something that doesn't, that probably would happen, within a decade, over a 10-year span, not really sure which year, but that adds the property value to 100%. So he estimated that to be, on average, 10% per year. So 100% over a decade. So overall, that is 250%. Okay, so 100% from the property appreciation, 100% from urban replanning, 50% from rental. Okay, so that was his number.
Yeah, okay. But so 50% from rental, 50%. See, are you saying profit? Are you saying rental income?
Rental income, rental profit, meaning that it's already deducted all the costs, all the management fee, all the maintenance, everything like that. Yeah. So his forecast, he didn't present as, detailed as yours, like this one, but
Well, I think we need to be certain on
right.
what the numbers are, because I mean each, you see, and this is the thing, he'll sit there and he'll go, well, I know what I can do without it. So, but you see, if he's got a if he's got a project and it's generating 100,000 a year into the rental income, from that he's got to deduct his cost of finance, which will be
Mm-hmm,
whatever it is.
mm-hmm,
Let's say he's having to pay, I don't know, um, I'm just making these figures up now. Three grand a month,
mm-hmm,
right? From that, for the cost of finance. Let's say he's got to pay off, I don't know, 10% for management of repairs and stuff like that, maintenance. And then he wants his company to take a profit of 10% of the income. So that's 10 grand for him, 10 grand for the maintenance, 36,000. So that's 56,000 off of that 100. So we're now on to 44,000 is the profit. But who does that go to? That goes to the owner of the building. Well, if Henry's the owner of the building, he's getting 44 grand a year, right? Profit. But if he tokenizes that and he doesn't want to pay anything for interest because he's willing to share that profit with other people, well, then that's there's got to be some level of cost of finance somewhere, just because you can't expect people just to give you stuff and then expect them to be happy with that. So that's where the sharing of the profit. So that might be then that with that particular instance, you would sit there and go, well, actually, if he's getting 10% of the income of the management fee, he's not paying anything in interest. Well, then that means the profit is 36 plus 44, which is 80, isn't it? So that's 80%, right? That's 80 grand rather, or 80% of the profit for the year, which is more than for the people who own the tokens, right?
Right.
But again, it depends on that's why he's saying, so if he sits there and he goes, well, it's 5%, well, that's a variable figure because it depends upon the cost of the finance, doesn't it? So, and it depends.
Well,
it depends
in
on
his scenario, in his assumption, there is no cost of finance. He's assuming 100% tokenized. Yeah, I think that's how the models.
That seems really low then. 5% return on investment for 5% profit. That just seems really low. 5% profit. I'd have to see the numbers for that. And here's the thing: that's why it's important for people to see the numbers, because they're going to sit there and make that judgment.
Right. True.
So if I'm investing 2 million and I'm only going to make 5%, I think I could probably invest that somewhere else to get more.
Okay, I see. But if the if plus the capital appreciation and everything else returns about 25% per year, then over 10 years.
But you don't realize that capital appreciation until you sell the property. Or you sell the token. But the thing is that's still a risk for the owner of the token, that they're gonna see the thing that makes it. And again, I would want to, if I'm investing in this, I would want to know why it's 5%.
Okay, I see. Okay.
You say it's 5%, great, but why?
Okay, the specifics.
And that's why I think, every one of these projects has to have some clear criteria about what's it actually going to cost, so that people can sit there. Because if you're saying it's a special purpose vehicle, and that means that it's a company generated for every one of these projects, and the owners of the tokens are going to be the joint owners of the company, well, then you're asking for, let's say there's 1,000, you're asking that the developer or the owner gets in bed and starts a joint venture company with 1,000 other people and us.
Right.
That's an awful lot of complicated nuances for that. And if I'm gonna be one of those 1,000, then I'm gonna want to know what it is I'm putting my money into.
Okay.
Because if I'm putting my money into a project where this guy is going to take 95% of the profit because that's his cost, well, that is it his cost, or is he just saying it's his cost? I'd want to see the reason behind it, and to have
Right,
an annual report that tells me that he's spent 90% of his profits on stationery in the company cupboard. Do you know what I mean? Or
Okay.
and I think it needs to be that sort of level of detail, because that reassures people that it's being done professionally.
Right.
If you look at how shares are operated in the US on the stock markets, there's an awful lot of information in that, and we need to kind of. I'm not saying we should do the same detail, but we should at the very least show the same kind of diligence in making sure people can see the salient points.
Okay.
And that therein is, that's another thing. It's like, okay, so if we're going to do a special purpose vehicle and we're going to set up a company for every one of these, how are we going to administrate that?
Right. Okay.
And who's going to administrate that? Are we going to do it?
Right. True. Right. Is that the our company, right, to handle the SPV's management? I think
Well, I think it's a good point to consider what's going to happen. Are we going to set it up? If we're going to set it up, well then, okay, so there's a setup cost, there's the legal structure. I mean, you do it once, and that basically you replicate as many times as you need to in each country, in each jurisdiction. So that shouldn't be a problem. But so effectively, the first one might cost, I don't know, 10,000 to set up, but you divide that by the 1,000 others that you're going to do, or the million others that you're going to do, and it doesn't cost as much, right? But then again, one might argue that that's why you have a professional in each country that's got a legal background that can do that.
Right. Yeah.
And you pay them with their professional tokens.
Right.
But you see, their professional tokens has got if you want them to have a profit share on the professional tokens, even if it's only for 10%, what are they profit sharing in?
They are sharing with the TAPP platforms on profit, right?
Yeah. So where is that coming from? That's coming from each one of these. So we've got to be drawing money from.
Sure. Right. It's going to come from each one of the individual projects. So.
And we might want to sit there and say that okay, for every special vehicle, per SPV that we spin up, we've got to have, I don't know. Are we saying then that's so we're saying that we're taking 10%, right? Well, is that because that 10% will do the setup and the operation of the SPV?
I would assume so. The 10%, right? The 10% was some, I mean, it's for the developers, right? Or for let's say the original building owners, right? Like Henry, right now he wants to liquidate maybe one of his property for $2.5 million. That is something that is considered his cost of capital, right? Although it's a one-time cost of capital as opposed to bank loans, which is over regular periods periodically. It's a one-time. So yeah, I think last time we checked, he said that 10% should be acceptable for at least for him, right? For this as a so he sees that as he can get a loan for 2% per year, but then over a period of 5 years, for example. So he see that as simply getting a loan, the equivalent of getting a bank loan of 2% times 5 years. But then this would be like a one time, and also probably would be simpler in different aspects. So, all right. So, and also with the blank, you cannot get 100%, but with our approach, it's possible to get 100%.
Exactly.
Yeah. So that's another benefit from the perspective.
But again, I think because the reason why you can't do that with a bank is that they mitigate the risk factor of the property market by getting you to put some skin in the game.
Right.
So I think the thing there is that that's why we have to be incredibly diligent with each one of these projects as to, well, how are they making money? Who is actually
Mm-hmm.
making the money? And I think that's why we need to be very clear about it.
Mm-hmm.
You know,
Okay.
what's
Okay. All
the
right.
actual cost? What's the amount that's being requested? What's the
Mm-hmm.
asset that's being offered up? How is the ownership currently standing? You know, what are the current revenues? What are the current costs? How will
Mm-hmm.
our loan affect either the ownership and or the current costs?
Mm-hmm.
And I think
Okay.
that's the important thing.
Okay. Okay. So these are all right. So okay. So that's some to do, I think, on my part to get clarity from Henry, if he can provide
Well, I
additional.
mean,
Yeah.
not just that, but I mean, like, let's say that, you know, I think if we put that into our white paper and say that, you know, this is the white paper. So we've got the one element of the white paper, which is for us to generate the TAPP, the platform. Then the
Right.
second part and a subset of that is the special SPVs for each project, and each
Right.
project we assume will have an own, you know, a capital ownership and a capital appreciation component and a rental profit
Mm-hmm.
component.
Mm-hmm.
Um, the exact percentages of those will be dependent upon each project and each SPV, because you know they'll be different based on country, based upon type, whether it's an existing building or it's a new build, um, and then also we'll have to take care of the assessment, the you know the risk assessment and the valuations and stuff like that.
Mm-hmm.
But all of that got to be taken into consideration prior to any SPV being started, and we putting it on the platform as being and then also process. Do we sit there and say that the process is going to be this? We've got a new project. It's project A, and it looks like this. Those that want to register interest, the initial offering is for 2 million, and then we
Mm-hmm.
open that up to the market.
Right.
We're going to have to have a platform which will enable people to sit there and pledge,
Mm-hmm.
you know, I don't know, and we'll say there's 1,000, there's 1,000 tokens or 2,000 tokens for 2 million.
Mm-hmm. Right.
How many tokens do you want to buy? And people pledge that. We'll have to have a format that those tokens go into. You know, those tokens are purchased for USDT, and then that
Mm-hmm.
USDT sits in a escrow account.
Mm-hmm.
Right? And then once
Right.
that's done and we've got the money in, then we form the special purpose vehicle,
Mm-hmm.
of which, you know, the articles and the head, you know, the heads of agreement, all that kind of stuff are generated, and then once that's done, then we can release the funds to, you know, whoever it is. And it might
Mm-hmm.
be that we do a deadline date of, you know, Tuesday at 12 o'clock, midnight,
Mm-hmm.
Greenwich Mean Time, for instance.
Mm-hmm.
And then, but we find that we're either oversubscribed, which is great, or we're undersubscribed. And what happens if we're undersubscribed? So
Right.
all of that kind of
Yeah.
process and all of
Right.
that kind of stuff we've got to figure out and then put that
Mm-hmm.
into. Also, you know, like I said in the message, is like, okay, if I've got a TAPP token for a worker, a developer, whatever you call them,
Right.
a professional token, right?
Right.
And somebody cashes that in, well,
Mm-hmm.
then they don't have any access or rights to any of the profits that come from that.
Mm-hmm.
So, and it might be that, let's say we don't. So let's say that we hand out. I don't know how much we want to think about it and whether or not it makes sense or not. But if we've got a professional token,
Hmm.
And do we sit there? Okay, so if on quarter one we raise, I don't know, 1,000 professional tokens,
Mm-hmm.
and
Right.
we've allocated that of TAPP profits, 10% goes to professional tokens. Do we? And let's say that 900 of those professional tokens are cashed in immediately for USDT. Are we
Right.
saying then? I think I said that we would only give a proportion relative to the initial, right? So that would then mean that your of your 1,000, you've only got 10% left.
Mm-hmm.
So you're not going to give that 10% an equal share of the total of the thing. It's of the available for the professionals. You would give them 10% of their 10%, if that makes sense.
I understand. You are saying that if 10% is being allocated for profit sharing for the professional tokens, then what happens if when the professional tokens has decreased in size, right? I think that's your question, right?
Yeah.
So, okay, well,
Because if I sit there and say that, well, it's you can either hold on to your professional tokens, or you can let them, or you can cash them in. But if the majority of people cash them in, those with remaining ones, will they get an equal share of the whole amount or an equal share of their relative percentage amount?
Okay.
Because it makes a difference to TAPP, because if TAPP sits there and goes, well, it's an equal share of the whole 10%, then obviously the ones that are left over get the best benefit, right? If we say
Yes,
that it's an equal share of the 10%,
incentives.
well,
There's
yeah,
incentives
but I
for them
mean,
to hold
then
on to it, right?
yeah, then again, you could argue that you know, if you give them access to 10%, and it's with I don't know, with 100 shares or 100 tokens, and 90 of those tokens are cashed in, so you've only got 10 left. So do that 10 get an equal share of that 10%, or do they get 1/10 of that 10%? Because where does the other 90% of that share go? Well, it would go back to TAPP, right?
Right.
So that then becomes an asset then for TAPP.
It seems like you prefer to maintain. I mean, to just in that case, right? Just share 10% of the 10% profit sharing, then, right? And keep.
Well, I mean, I'm just trying to think about how do we make it, you know, is it a fair way to make more money? You know, or do you just let people, you know, like you say, it's an incentive. Well, okay, if I hold on to them and everybody else spends them, arguably one person could hold on to one professional token. Everybody, all of the other professionals cash in all of their tokens, and then that one person gets 10% of the profit to themselves.
Is that something we want to allow, right?
Exactly. Or do you just allow them to have, you know, whatever the percentage that they rightly own, and that's all that they get, a percentage of that, and then the remainder goes back to TAPP.
That's a good question. I think according to my original thinking or design, the idea is that let's say the professionals, they are entitled to 10% of profit sharing. What that meant is that every time profit is being distributed, right, 10% of that goes to all the professional token holders, whatever how many they are. Okay, if there are many, then many will share. If there are few, then only few will share. So that, I mean, that's how the incentive part of why they should be keeping their professional tokens, right? Because it's expected the professional tokens will actually increase in value over time due to the profits. That's
So
that's going to be put.
what happens then if all of the professionals
Uh-huh.
hold on to all of their tokens and they never cash them in?
Then there's every time there's a profit sharing, the profit, suppose will increase. It's still going to increase the value of the professional tokens to to the
But
point.
surely it should go down. But I mean, here's the thing: like, it will go. You can't. It'll only ever be 10%, won't it?
Yeah.
So if you've got 100 to start with,
right.
and you get a hundredth of 10%.
Oh yeah, Mike, you want to
And then,
turn the sharing off, the screen share?
oh, sorry. Yeah.
Yeah, I think it's okay. Go ahead. Yeah.
So if you've got 100 tokens,
Mm-hmm.
and then they're sharing 10% of the profit for the quarter, I suppose.
Mm-hmm. Okay.
Then they've got that. Then it's complicated, isn't it? Because if you've got, and this is why it's important to have.
Go ahead. Important to have what?
I was going to say it's important to understand what the numbers actually look like, because there's a way there, surely, that if I'm a professional that holds on to every one of my professional tokens, how much compounding is going on? Because we don't want to be in a position where the person can just sit there and stockpile the tokens and then end up owning, I don't know, getting more than their, they're only ever going to get 10% of the profit.
Yes.
So if you start off with 10 tokens and you hold on, and the next time you get paid, you get another 10 tokens, so you got 20 tokens. You're still only going to get 20 tokens share of 10%, aren't you?
Oh,
and if you hold it again, you're going to get 30 tokens.
Okay, so this is how I'm thinking. Okay, I think this I don't know. To me, this is probably easier. Is that the idea of NAT, right? Net asset value, which is typical for funds, right? It's like JCF has an NAV, or other funds have an NAV, which is very simply how much assets you have, how many tokens, right, or how many certificates, and then you just divide, right? Assets over how many tokens you have, right? So that gives you a calculated amount of a NAV. And you can think of professional tokens, something similar. There's a certain number of circulating professional tokens that's out there. And there's also assets that's backing up these tokens. Originally, they are created at the 1-to-1 ratio to US dollar. So in that sense, each professional token is like a stable coin worth $1, right? Okay. But then what happens is every time there's a dividend, or sorry, a profit sharing, right? What you do is you put that profit as the collateral as part of the pool, right? So what happens is that actually increase the NAV of each individual tokens. Does it make sense? Okay, so
yeah, but that doesn't make sense, because then if I sit there and go, okay, well, I've got it's because if somebody goes, well, okay, I want to cash in my token, so I've got my original $1 that my token is worth, because that's how much work I did, plus 10%, for argument's sake, that's another dollar. I know I'm just making these figures up. So now I've got $2. $1 belongs to me because that's how much I'm worth on an hourly basis, and $1 is the my share of the dividend. That's $2 you're giving me now. Now, one we've already allocated comes from from some operational funds, right? But one is from the profit. Now, if you're saying that then that profit goes into a fund, which then everybody gets the value of, but as soon as somebody takes some of that out, they're entitled to whatever the percentage is, and the more tokens you've got, the greater the percentages.
Yeah, yes. I mean, okay. Okay. I think it is, yeah, probably it's easier to use an illustration. All right, so you can see my screen here.
Vaguely, it's tiny.
Okay. All right. So I'm putting this. Okay. Is it better now? So
I'm putting it onto my big screen to see if I can see it better. But...
Sure.
Oh, there we go. Yeah, okay, fine.
Okay, so this is the number of tokens, right? And this is the underlying assets. And this would be the NAV. Okay. So I'll just use an example, right? So this is always the assets divided by the number of tokens. Okay, so that's the NAV. And let's say this is time. So what happens is, if let's say you are, there's being profits being given. Okay, so I guess in your case, in the example you just gave, let's say I have, like one, I guess originally I have one professional token, right? And then now I have another one. Let's say that's the profit. I think there are two ways we can do this. Okay. One is, I'll give both scenarios for you to see. Okay. One is we keep the token at 100. Okay. The profit simply, let's say the profit is another $100. So the NAV actually becomes 2 now. Okay. So the other way is to issue. Okay. So this is case 1. And this is case 2. The other is actually you issued according to the NAV, okay, the same amount. So you actually have, you actually created another 100 tokens to be given for people, right? I think these are both valid approach. Okay, so this is like the first time instance, right? This is how originally start, and this is how you can distribute profit. I think one of the two ways. Now they have
you see that's very conceptual, but it's not very realistic as far as I'm concerned. Because I don't. It's just what I mean. I'd rather work it out so that if you're saying that a developer is, what's a developer worth? How many dollars an hour?
Oh, okay. 20. You can, let's say, $20, $40, depending on how good you want to hire.
So call it $30 then, right?
Okay, sure.
And let's say for this particular project on this particular tokenization, we want 100 hours, right?
Oh, okay, sure. Now,
yeah.
That's to that. Okay. 100 hours, right?
Yeah. So how much do we actually owe them?
Okay. So
in terms of dollars,
$30, 100 hours. That's the number of tokens you want to.
And what's an asset?
So $3,000.
So we've actually got $3,000 in the bank ready to pay this guy.
Right, exactly.
And we give him 3,000. So he's got a choice now that he takes $3,000 in tokens, and then that's it. And this is
Right.
the only person that we're dealing with, right?
Right, exactly. Okay. So let's say we are distributing profit, right? How much profit would you like to give? $300 profit,
So we're giving
or
him 10% of the profit, and the
which
profit
is
happens to be
which is
on this one we've made 100,000. So give him 10% of 100,000, 10 grand.
100,000. So 10%, that would be 10,000. 10,000
Yep.
profit.
Yep.
Okay. All right.
Yep.
Okay. So again, there are two cases where you can do this. One is you give you just issue 10,000 new tokens, still at NAV of 1. Okay, so what happens is that's the total number of, this is one example. The other example is you just dump that into the pool, whereas the person still has 3,000 tokens total, or the total number of tokens still. That increases the net asset value from 1 to 4.3. Can you see the difference? So these will
Yeah,
be
but
two
this
different.
is actually, but so we're paying developers from the TAPP platform. We're not paying them from each project.
True, yes. Once
So this,
professional tokens, yeah. So once professional tokens are created, they have an NAV, right? Which you know, the incentive for them to hold on to could either be they would be getting more professional tokens in this case, right? Like this, or we simply put the profit to the pool, right, to the asset pool, so that the NAV increases over time, right? So it becomes more valuable.
right. So what
And
happens if I cash
okay,
in?
sure. All right. So
So
let's
you've
say you're
given, so
cashing
wait a
out.
minute, but
How much?
yeah,
How much you want to cash out? How much, for
so
example?
1,000 tokens.
All right, you want to cash out 1,000 tokens, or that can you I do not don't talk about token, but talk about how much let's say US dollar you want to cash out, because
Well, no. If I've got, because at the moment I've got 3,000 tokens, right?
right in this case from the start,
Yeah, I've
yeah.
got 3,000
Okay, sure.
tokens, and it's either worth. They've either increased to in case one, you've increased my 3,000 to 13, or in case two, I've got 3,000 that's worth 13.
Right, exactly.
But
Yes.
the point is, I started off with 3,000, and so I guess I'm looking at it from the point of view of I've got 3,000 that's now worth 13. So we've got the same amount of tokens because that's what we're going to work with, right? I would have
Okay, all right,
thought.
sure, all right. So that's
So if
a
I take 1,000 out of that,
sure, $1,000 out, right?
no, 1,000
Okay,
tokens.
you want to take out 1,000 tokens. Okay, sure.
Yeah.
So then what happens is this is how much? This will stay the same though. So that will be still the same. And this is how much
How can that stay the
okay,
same?
sorry. Your if you take out 1,000 tokens, oh, this is let me okay, so what happens is you're just okay. Yeah, this should be okay. Yeah. So what happens is when you cash out something, right? When you cash out, uh, it's being calculated cash out at the net asset value at present. Okay. So if you take out 1,000 tokens, each is worth 4.3. So that's actually worth about $4,300, $33. So this is how much, assets that's left. The NAV will still stay the same, okay, even if you cash out. But the underlying assets would decrease by, 4,333.
Of course, yeah, because
That
the
does it make
NAV stays the
sense?
same because the NAV today at this moment
Yeah,
is $4.33.
right,
You take away
exactly.
yeah, okay.
This is how the fund system works. This is how JCF, the main fund, works, at the moment. Okay, so this is in fact how all the, to my understanding, how all the funds out there work. And I think because of that, there is a very well-known, well-accepted way to calculate, because this is actually the easiest way or the well-accepted way for you to, it allows various things. For example, it allows new tokens to be created. If new tokens are to be created, it has to be created, let's say we are simply not for profit sharing, but simply because we want to hire more people, right? We want to pay more salary for more people. What happens is when we want to issue new professional tokens, it has to be issued at the NAV, you see, at this point. So for example, if we want to spend another $1,000 to hire whatever, then what happens is this stays the same, okay? And we just add this, let's say $1,000, right? But what happens is the total tokens would also increase. Okay, so that's that. So the total tokens actually will increase from from 2,000 to 2,230. Okay, does it make sense? Yeah.
Yeah. No, I'm getting the broad thing of it. But let's say that you got but because you're saying that for every token that if you're saying that you're going to pay a professional in tokens, and that they can hold their tokens and translate them for the dollar value,
right,
that they are for the
or
day,
they can hold on
right?
to it. Yes.
Or they can hold on to them after a period of time. It will be worth the dollar value plus the profit that's added to it.
The future profits that's expected. Yeah.
Now, but you're saying then that you've got to hold the dollar value for that one token, because at the very least they can redeem it as a dollar, or at some point in the future hold it for a dollar plus profit, or sorry, a share of the profit. Now, let's say at some point in the future they want to have their dollar plus profit.
Right.
Then you've got to have it's not that's still going to be at least $1, isn't it?
No.
Token.
So, well, don't. If you keep thinking about the original dollar, it would be maybe too complicated. The easier way is to always look at the current NAV. Okay, so for example, if there's a new guy, who's willing to accept $1,000, right, as his work, but the NAV at the point is already 4.333. What happens is we allocate $1,000 to the pool, which translates to 230 new tokens issued. So we pay him the 230 new professional tokens, you see? And that person, that developer, can decide whether he will cash it immediately, right? Maybe
Oh,
everything.
so they could cash the 230. They might cash. They
Exactly,
might cash 200. Get it at 200 times 4.3, and then
exactly.
keep
Yes,
30 of them for later.
yes, exactly.
And
That's the
and later
flexibility.
on,
Yes.
and then later on they get the NAV actually
The
goes up
profit, right? Exactly.
because
They
we
were
add more profit into it. The NAV goes
exactly
up, and
right.
those 30 are now, they were worth 4.3, but now they're worth 5.3. So he's
Mhm.
made $1 profit because he's
Right,
held on to.
right. Yeah. So now you
Okay,
get
I
it.
see.
Now you get it.
Yeah. Okay,
So this
500
is actually a simple scheme, okay, to keep the balance, which allows flexibility in terms of we can always add new, you know, we can always add new
Right. So
assets to the pool. We can also provide profits, right? Profit sharing
yeah.
to
No, okay, I
existing
get that.
holders.
So long as, right, the guy,
Uh-huh.
so long as we've got a mechanism so that the guy's going to cost us $1,000, we toss that $1,000 into the pool, and then they can choose whether or not they take out the appropriate amount of tokens
Right.
based upon their thing, and then when we add profits to the pool, then the NAV goes up, and yeah,
Exactly.
Right.
And
Right.
we can artificially reduce the NAV as well. For example, if we want to make this to half of the NAV, we can simply double the pool size, double the token size. So for each one token you hold, we give you another token. So, I mean, this is just an example of how that will work.
But why would you do that?
Well, I'm just saying that in case we want to do that, you can always, well, why would you do that? If you want to keep the NAV smaller or to increase circulation, you can do whatever. But
Right.
my point is, they still hold on to the same amount of value. Okay, so make sense now? I mean, Mike.
Yeah. No, I feel much.
Okay.
I feel more comfortable with it now.
Okay.
I get it. It's the okay. I see where the variables are, because I just couldn't get my head around it.
Right. Okay.
But I think that's
good.
the important thing, is because if I'm just what's the word? If I'm looking at it from a developer's point of view, what I was concerned about is that the developer will just kind of just hold on to things and get an ever increasing amount of. Okay, fine, that makes sense. All right, fine.
Okay. All right. So, all right. So maybe talks about next step, right? I got my white paper to work on. Okay. And I guess you have your deck, right? And maybe with this understanding about the professional tokens, maybe we can incorporate that better to the text or whatever diagram, graphics, figure we can, right?
Sure.
All right. So all right. So I guess that's for me the very immediate next steps to get to the next iteration of the documents.
Right. So I will try.
Anything else you think we would probably, yeah.
I will try and join. I don't know that I will be able to make next week, because I'll be traveling.
Okay. Yeah.
It's possible that I will
Okay.
have. I doubt it very much, actually, but I might.
Okay.
I might be at Heathrow by 12:30. No. Yeah, 12:30 next Monday, maybe.
Okay.
I hope I will be.
Okay. All right.
But then I won't be through security or anything like that. I don't think I'll be sitting down through security until like 1:30. So
Okay.
Yeah, there's that, which will mean then that I'm just realistically not going to make
So
it.
what time is it? What time is it at your place? It's 1:40 now, right?
Right now,
1:40.
yeah, it's 1:40. Yeah.
I see. Okay. All right. Okay. So does it I guess, does that mean should we sync briefly at about this time next week then?
Well,
Or
I'm probably going to be on a train. I'll be on a train until theoretically 11:15.
okay,
So
okay.
it'd be easier probably
To do it earlier?
to do a quick
Or-
sync earlier.
Okay, okay, sure. So, I mean, that would be what would you what would be the preferred time for you?
I
Is
suppose.
it
Well, I'll be sitting on a train from 8:30 till 11:15.
oh half
I'm
past
not
eight
going
to
anywhere.
11. Okay. All right. So I can definitely do earlier if you like. Um, would 10 a.m. work?
Yeah,
Okay,
won't
that
be
would be
anywhere.
2 hours earlier from our
Yeah.
normal. Okay, sure, sure. That works. That will be 5 p.m. for me. 5 p.m. All right. Let's do that then. Okay.
Okay.
Okay. All right. So thanks. This is definitely progressing. And and yeah, just I was listening to chat about the compound effect from Darren Hardy. He said that when you're doing the compounding effect, you don't feel like making progress, but then all of a sudden there's like a Chinese bamboo shoots up.
And let me show you this. Can I share screen with you?
Yeah, sure.
Okay, fine.
I'm pretty sure that if we keep the momentum moving forward, then at some point it's going to shoot up.
Yeah. Hold on, let me just do this. Share screen. Boom. Where is it? Come on. Where is it? Ah, here we go. Go on then, share it. What?
No, I haven't seen it. Okay.
That's not what I wanted. Hold on a second. Share screen. Oh, that's the one I want. Share. Why does it say my share? It's weird. You are sharing
Oh yeah,
your screen
no.
sharing is
Yeah,
paused.
you're
What can you
showing
see?
now. I
What can you?
I see Mike Q is starting to share screen. The text.
Really? It's not very useful, is it?
Okay, but
Hold on a
all right,
second. Let's see.
it was
All right.
working.
Okay.
Oh yeah. Okay, yeah,
Okay. Can you see a slide?
yeah. I can see it. Yeah,
So you can see the income sec, yeah?
right. Sure, the logo, right.
Cause and effect,
Mm-hmm.
cause and behavior, time. Is
Mm-hmm.
that we're on the same page, right?
Yes.
Okay, so
Mm.
so if you're doing something, right, what you do, you have a behavior, you have a cause, and generally speaking, people start and they put in a lot of effort, and then over time they kind of decrease the amount of effort they put in.
Mm-hmm. Right.
But then the effect of that is that when they start, you tend to put in a lot of effort at the beginning, but you don't
Mm-hmm.
see much of a result. Whereas
Mm.
actually, the results will come over time. Okay.
Mm. Right.
So this is part of what I'm doing with this other guy. So we've got this myth of linear growth. So, and that is where you've got a change in one quantity produces a proportional change in another.
Right.
Right. So if I put in one, I get back one.
Mm-hmm. Right.
Or non-linear, which is you get a non-linear change for every one unit that you put in. So I put in
Mm-hmm.
one and I get 100 back. Okay,
Mm-hmm.
so
Right.
there's that, right? So then you've got a normal table and you've got the idea of results and then time. So you got logarithmic growth. So that's a massive change at the beginning, but then it gets really slow at the end. So you put in 80% of your time and effort and you get 20% of the results, right? So that might look like that.
Okay, right.
Then you've got exponential, which means you get very little back at the beginning, but you get massive growth over time.
Right.
But then you got linear growth. So what most people do is that they look at it from the point of view of they're putting in logarithmic effort, and linear growth tells them that, wow, we've got better than expected growth. This is fantastic. We are, I'm getting some real results here. But then there's a massive drop off when people get to this point where their logarithmic growth is just simply not as good as what they expected, and they get disheartened because it's below what they would expect. I've been putting in 10 every day for the last 6 months, and I'm just not getting anything out of this anymore. So they stop.
Right.
Or you look at exponential growth, where a lot of things happen, where you're putting in large amounts of effort and time, and your linear growth tells you should be getting something back, but you're not. And that's the expectation gap.
Okay.
And that's where most people quit, because they're just not getting anything. But actually, in this bit here, where it crosses over the line and the exponential benefits from the growth kick in, and that's where you really start compounding up what you're getting. And that's where you get this massive chance. Yeah, so you said bamboo.
Yeah.
Ben, so it's that. This is something I'm doing. This is part of my training that I'm giving this guy.
Wow, that's impressive.
So,
wow. Okay.
but then that means that we have to, when we're in this cycle down here, we have to be really, persistent with all the things that we put on, because it's at this point here that most people give up, around about here.
Right. True. Very true. Yeah.
Anyway, there you go.
Wow, thanks. I mean, yeah. Okay. All right. So, I hope we can now execute towards the exponential growth.
Yeah, me too.
All right. Okay,
All right,
so yeah, thanks so much. And yeah, have a fantastic week and also great preparation for your trip. Okay, and see you next week at the
yes,
at the train.
all right.
Okay.
All right.
All
Take
right.
care.
Take care.
Take care.
Bye
Bye-bye.
bye.